Good morning. Welcome to Forex Pro Charts, our discussion of the weekly trade results for the week beginning January the 30th, 2011. We probably should have posted these results back last week on February the 6th when we posted our free video analysis, but we did not get those up, so we wanted to get those up this week. So let's go ahead and take a look at our trade results. We had a great week, the week of January the 30th, and let's take a look. We had 5 separate trades. Okay, for the Audi, we see that price came up, moved up nicely, hung around a little bit on the daily armpit, then moved through it, came to within just a couple of pips of the 60-minute armpit, and did have a 20-pip bounce. Some of you put a cushion on the 20-pip armpit, and if so, you would have gotten your bounce early there. So we actually got a bounce of close to 50 pips, actually, depending on exactly where, but even right here we had our 20 pips. So depending on exactly where you moved your stop to break even, if you did at that point. Anyway, then price came back up, hit the 60-minute armpit on the nose, and moved back down for 90 pips right here. Then it retraced a little bit. Of course, this was the very end of the week, and there was an opportunity for price to continue down the following week. I don't remember right now exactly what it did the week of January the 5th, but we certainly had an opportunity for 90 pips. Many of you take your first portion of your trade out at 20 pips and the second portion of your trade out at the daily armpit, because that tends to be, as we can see here, a very likely point for price to retrace, and price could have gone back up through. And that would have been about 35 pips, a little bit narrower distance between the 60-minute and the daily armpit this time. But even if you did that, you would have had your 20 pips on your first portion, your 35 or so pips on your second portion, and then on the third portion would have been down here at 90 pips. So a very nice opportunity for a trade here. This type of price action we talked about in our analysis quite a bit the week of February the 6th. And have for a couple of weeks, that there are different ways to handle your trade. We do see this type of price action pretty regularly. Our most conservative traders will take their 20 pips and immediately move their stop to break even, and then if price goes back up and hits the armpit again and closes them out, it closes them out, but they would prefer not to risk the loss. Many of our other traders will close out the first portion and then move their stop, but maybe not quite to break even, to allow for price to, maybe hit the 60-minute armpit and return to it, although in this case it didn't exactly hit. But anyway, that's just something to keep in mind. But here we had a very nice trade, 20 pips on the first portion, 30-some pips on the second, and possibly 90 pips or more on the third portion of your trade, again, depending on exactly how you manage it. Let's take a look. We had 5 trades, I said, this week. Let's take a look at the next one. Okay, our second trade was the CAD, and as you can see, the CAD came down to a support zone and then bounced, and you can see we have marked a couple of things. First of all, for those traders who trade a cushion, and some of our traders trade a 10-pip cushion, price would have come down and hit that 10-pip cushion right there, and it would have bounced for 71 pips. So a very nice bounce. Did not quite make it back up to the daily armpit at that time, but you would have certainly gotten your 20 pips, and again, depending on how you manage the second portion of your trade, some traders go for 50 pips, some traders go to the daily armpit, some do whichever comes first. So anyway, very nice trade here. Then price did move back down, but not quite to the entry point, so you wouldn't have it would not have stopped out, and then price did, sure enough, go to the daily armpit. So your second portion there would have been 98.51 to 99.12, about 60 pips or so. Let's see if we can get that a little, there we go. So it would have spiked above, then it would have come back down, and if you had already moved your stop to break even, as you should have at this point, would have stopped that third portion of your trade out. However, at this point then, traders who wait for the 60-minute armpit would have seen it bounce for 21 pips, come back down. Now it spiked 2 pips below the edge of the zone. Again, as you know, we recommend a 5-pip cushion below the end of the zone in a support or above in a resistance to allow for just those 1 or 2 pip spikes. So again, depending on how you had managed your trade after the 20s, if you had, because of the small risk right here, many of you would have just left this in, and then you would have seen price return, spike just through, but then it went up for a subsequent bounce of 65 pips. So again, just exactly how you manage. We talked about this a lot in our analysis, which if you're a subscriber, you get those every week, and just depending on exactly how you manage your trade, you would have at least had the 20 pips, and possibly many more, whether you use the cushion or not, up to 60 pips. So that was the CAD, and that was also a very nice trade for the week. Let's take a look at the third one. Okay, this was on the USD CHF, again for the week of January the 30th. And again, we saw similar price action. We saw price come down here, bounce off the 60-minute armpit. That bounce was for 29 pips. Then it came back down and spiked just a few pips through, kind of lingered around, spiked for 57 pips. Where did it go? Up to the daily armpit. Came back down, again, just spiked just through to the exact same level that it had previously, actually not quite, like maybe a pip away, and then moved back up, all the way up. So we saw an initial bounce for 29 pips, the second bounce for 57 pips, and then this final bounce from the third all the way 254 pips. This is one reason why it's a good practice to kind of move your stop instead of exactly to break even, as we recommend for our most conservative traders who just do not want to risk any loss, or any more than they, just don't want to risk loss any more than they absolutely have to. Of course, there's always a risk for loss in Forex. But for those, for traders who really want to be able to capture this, we do recommend moving your stop after you've achieved your first 20 pips, because it doesn't do you any good to get the first 20 and then lose 60. So we do recommend that you move your stop, but we do very often see this kind of price action, and if you bring your stop to within 20 pips or 15 pips, different traders use different levels depending on their comfort level, then you can very often capture these subsequent bounces on the 60-minute armpit, and in this case that would have been very rewarding indeed, as you would have gotten all the way to the daily armpit on your second portion, and then on your third portion could have gone all the way to 254 pips at 9,600, which would have been a clear stopping point because of the psychological barrier. We would have had a number of other stopping points also where you could have either locked in portions of your trade, of your profits, or taken profits out entirely. When you got to all of these left behind targets, there's so many of them, so thick, that would have been a good indication that there was going to be at least some retracement, as there was. Now, if you had moved your stop at this point on the third portion of your trade to the daily armpit, you would have protected those profits right there from that move, but you would not have stopped out. And then when price did eventually move up, again, this trend wall would have been one area where you could have protected some of your profits or taken some of your profits out, or you could have gone ahead and moved your stop from here up to below these intersecting trend lines, and sure enough, price went there and then breached this and went all the way up through here, at which point I would have my stop set no further than this extended trend wall, and possibly at this point, wouldn't want to get greedy, would have had it set slightly below, at or below this trend wall, again with 9,600 being that strong psychological barrier, and with a profit there of 254 pips. I would be wanting to protect as many, as a good portion of those pips. So this was a very, very nice trade. And again, at the end of the week, we still had room for more. And again, I can't remember exactly whether that continued to go up or not. You could take a look at your charts to find out. But this was a very, very nice trade. And we still have, I think this is the third one. We still have 2 more. We have a total of 5. Let's take a look at the next one. Okay, so this trade was the GBP USD, and we had price move through 2 zones and had possible trades on 2 zones. This zone, we had previously had a trade, a bounce off the 60-minute armpit, and price had revisited this zone several times. We just didn't feel that it was a good zone anymore. So when price moved up to this 60-minute armpit yet again, we did not post an alert because we felt that that would be pressing our luck. As you know, we post alerts, in a fairly conservative manner. We have traders that at times will take trades such as this one that we do not post an alert on. But when we feel that trade is starting to get riskier, we then do not post an alert. In this case, price did bounce just a little bit off of that 60-minute armpit, and I believe that was exactly right at 20 pips that it got. But then you can see that price breached that armpit, hit the 5-minute armpit and bounced just a little bit again, and then of course breached this entire zone quite strongly. And of course, for the subsequent week, we crosshatched that zone. Then, however, price continued up to the next zone and zoomed in a little bit closer to take a look at this zone. You can see that on the first bounce on the 60-minute armpit, price bounced 42 pips down to below the daily armpit, and then it returned through the 60-minute armpit and went up to the 5-minute armpit, and then bounced again and bounced all the way for 181 pips. So we had this for 42 pips. I'm sorry, we also had this bounce here for 57 pips. Then price came up, came down, and 181 pips. So again, depending on how you handle your trades, you would have, could have closed out your first 2 portions. Now, many of you would have already moved your stop to down in here somewhere, even if you accounted for this kind of thing. And so you would have stopped out on the 3rd portion of your trade here. Probably at this point you would have actually been at break even, so you wouldn't have had a loss, and you would have had 20 pips on your first portion, and probably 50, some greater portion there. Now, if you trade the 5-minute armpit, which is not quite as reliable, but always has, generally has a smaller risk. In this case, that risk was still 30 pips, so still fairly significant. But with the presence of this weekly, I think, armpit, would have been strengthened. So traders who do trade, this is a little bit riskier trade, but we do have traders who do trade this 5-minute armpit, and we have some traders who on their 3rd portion will leave their stop back at the original level. So anybody who did that could have gotten this 181 pips. Most of you will not have. Most of you will just have gotten these 2 bounces. This is frustrating when we see something like this and we don't trade the 5-minute armpit. That can be very frustrating, and hindsight's always 20/20 vision and so forth. But again, remember, if you take the trades with the highest probability of success and the lowest risk, you'll be successful. But for those of you who do like to trade those 5-minute armpits and found that this fit within your trade plan, and a lot of you will trade those, but just maybe with a smaller size if you think it's riskier. Anyway, would have captured that very nice run. So that is 4 of our 5 trades for the week, and let's go back and take a look at the final trade. Okay, as you can see here, price came right up to within just a few pips of the 60-minute armpit at 78.25. Just continued that return and bounce for 20 to 30 pips each time. Finally hit the 60-minute armpit up on the nose, and those of you who don't trade a cushion would have been driving yourselves nuts at this point. If you're anything like me, wishing you'd had the cushion on there, but patience generally pays off, and sure enough, price did come up right here and hit that 60-minute armpit exactly on the nose, and then it took that very nice bounce for a total of 159 pips. So this also was a very, very nice trade, and many of traders at the end of the week still had the trade open there, and many opportunities again to protect profits. The daily armpit here, the trend wall here, the weekly trend wall there. We had a couple of zone within zone type thing here. You know, many opportunities to protect profits, and a very nice potential profit here of 159 pip for a total bounce. So those were the trade results for the week. Our trades do seem to kind of run in cycles, that we'll have several trades, successful trades like that in a given week, and then in the following week or in other weeks we may only have 1 or 2 trades, or there are occasionally weeks where we don't have any trades at all with this particular trade setup. So it seems to be feast or famine. Last week was certainly a feast, and I think the total bounces were 700 and some pips. Of course, most of you would not have captured that many pips, but certainly would have had a very, very nice week. For more information on Forex Pro Charts and our signature trade setup, you can go to our website, www.forexprocharts.com. We have full analysis and charting services. You can get a free week-long demo, and you can sign up to receive, depending on the level of subscription that you choose, you can sign up to get our trade alerts during the week, and also to get our charts with the zones and everything already loaded on them sent to you each week, so that you do not have to do the chart setup yourself. So thanks for joining us, and we're going to begin posting our weekly trade results on a video every week, and so we look forward to seeing you next week.